South Africa's Investec reported a full-year profit increase of 10.2% today. Joining us now from the London Stock Exchange is Investec CEO Koseff. Stephen, good to have you with us today. And looking through all the headlines, it does seem as though you are making it very clear that Investec is in a positive position and one that is aimed to continue its organic growth. How has this been achievable, especially given the tough economic environment that you're dealing with in the UK, whether it be SA, and the global influencing factors that are obviously in the headlines as well?
Look, obviously the world went through a very tough period. I think in this period we had more tailwinds than headwinds. We took a decision about 18 months ago to reshape our specialist bank, and that meant we had to sell a number of businesses. We sold our bank in Australia, we sold our mortgage business in the UK and our mortgage business in Ireland. And that has really simplified our business, and now we can concentrate on servicing our core clients and, building out what we did in South Africa over the last 10, 15 years. So we also had very strong growth in our wealth and investment business, and we had good growth in our asset management business. And we've had good traction in our South African bank. It was up 36%. We were number one in the league tables in M&A in South Africa and number one in the league tables in M&A in the mid-cap space in the UK. So I think, we've had a very satisfying year.
Stephen, it's Lindsay in Cape Town. When I see your results, you're in the best position, you say, since the mid-2000s. I can't remember what position you were in the mid-2000s, but it's a positive statement. And then you say it was a solid performance. I watched Arsenal versus Hull City last night, and Arsenal gave a solid performance, but they still drew 0-0. You're being a bit modest here.
Look, I think, there were strategic adjustments that had to take place. And when we look through everything, I would say maybe solid is understating, because from our point of view, I believe it was a good performance. I mean, there are areas that we can do better in, and that's perhaps why we said solid and not great or very good. But I think we've made good progress.
Stephen, our local competition commission is going to investigate suspected collusion when it comes to the forex markets. Maybe give us your take on this as to the reputational damage and financial implications it could have for your firm.
At the moment we haven't a clue. I mean, the first we heard of it was yesterday when an announcement was made. No one's had any dialogue with us, and we're waiting to hear what they're going to investigate. But clearly it's something that they're worried about, and we're happy they investigate and we'll cooperate with them.
Lindsay again. I said Hull City, it was actually Sunderland. You've done a very good job in streamlining the bank and focusing on your core competencies and getting rid of things that perhaps were injudicious when you went into them. How much further is there to go? Are you now as streamlined as you want to be?
We've still got a residual legacy book in the UK. It's down from, at its peak, £6.8 billion, which was our post-crisis loans and advances, to £728 million. It will take us another 3 to 5 years to clear that. But overall, it's a very small part, so it won't be as relevant as it has been in the past. So I think, we've dealt with the big stuff. It's now about how do we grow, can we compete, and can we deliver what we expect to deliver.
Once you've consolidated, which you seem to be very close to doing so, and as I say, focusing on your core businesses and wealth and investment and asset management, doing incredibly well, will you start to spread your wings again? Is there anything that you're eyeing at the moment? Because you can't just, I suppose, rely on organic.
Well, at the moment we want to rely on organic. I think that if you want to buy quality businesses, they're exceptionally expensive. I think we bought some stuff at an opportune time, like we bought the wealth businesses in the UK at an opportune time, but to repeat what we did in today's world will be very expensive. So I think the game for us is organic at this point in time. And down the road, there may be opportunities, but we really want to focus on building the business organically.
London's a very expensive and a very vibrant city, whether you like it or not, whether it's the Russians or whoever it is, boosting that London economy. When you go to the UK, are you encouraged, especially after what has happened with the stunning Conservative victory in the recent election?
I think we're very encouraged by the fact that you have a majority government. We're encouraged that there's political certainty, and we think that that will be good for growth and good for business, that you have political certainty in a majority government. So I think we have seen the economy started to pick up nicely in the UK. It was a bit slower in the first quarter, but you're seeing unemployment fall off, and I think one is getting into quite a good space here.
Well, a big thank you.
It's vibrant and there's a lot of activity.
Stephen Koseff, the Chief Executive of Investec. Thank you so much for your time.